702. 702. Finance Feature.
It is the finance feature, and of course, today we're going to be speaking about financial planning before immigrating. You know, when couples decide they're going to move, I think there's the things that they consider, like, what are the things I'm going to miss in South Africa? Let me make sure that I pack those, and they get those things out the way. They say their goodbyes, they, see their families for the last time in a while before they come back to South Africa. But I don't think people are considering the tax implications, particularly on the back of National Treasury proposing changes to the tax treatment of certain asset transfers, particularly between spouses when couples immigrate. And so we're going to be looking at what that means for a couple that is moving abroad. It is a major life decision, but it's also a financial one. And for South Africans planning to immigrate, there's more to consider now than simply packing and finding a new home. And so for that conversation, we've got Harry Scherzer, who is the CEO and co-founder of Future Forex. He joins us now on the line. Harry, good afternoon. Thank you so much for your time.
Good afternoon, Kgomotso. Thanks for having me on.
Listen, it's an interesting conversation to have, because when we move and when couples or people and families decide to move, there's lots to consider. I don't think we're always considering the tax implications as we should. And now with these new amendments or this draft, I'd imagine it's really important to consider that now more than ever.
Yeah, absolutely. I think there's a lot of complications when people leave the country that they're unaware of. I mean, any movement of money internationally in South Africa is notoriously difficult because we have exchange controls, and really the government wants to know exactly what's moving and why. And in this case, what they're actually doing is the proposed change is actually to close a proposed loophole which was available, where essentially what used to happen is, let's say a married couple were moving to Australia. What they would do is let's say the wife would move 6 months earlier. The husband would stay in South Africa, and he would transfer his funds to the wife when she's a non-South African citizen. Now, as a South African, you do have the ability to send money to your spouse tax-free. There's a tax exemption on that. So what would happen is the one spouse would send money to their now emigrated spouse, and then when exiting the country themselves, they would have less assets, so the exit tax would be lower. And SARS and National Treasury basically said, hold on, we're losing a lot of income through this loophole. We need to look at closing this. And that's what's effectively happening here.
All right. And who's likely to be more affected by this? I'd imagine it would be couples, who are looking to immigrate, or if it's just one, a husband or a wife that's looking to move.
Yeah, exactly. So what's going to happen is that those couples that are legitimately for logistical reasons moving asynchronously. So let's say the wife finds a job abroad and the husband wraps things up in South Africa. If he wants to send his wife money, previously it would be free, and now he would pay a donations tax of 20% up to 30 million rand and 25% thereafter. And so for those couples that weren't treating this as a loophole, who actually were asynchronous in their move, they're now going to be taxed for this. So it does hamper those couples. However, I can understand where National Treasury are coming from in making this change, despite it having a negative impact on some legitimate movers.
And I'd imagine it's because too many couples were using it as a loophole.
Exactly. Typically, it was the ultra wealthy that were using it as a loophole, because that's when it's pretty substantial. Because exit tax for the wealthier population is up to 18%. And they were effectively saving 18% on a bunch of assets by doing a free transfer. And so, the government cottoned onto this and said, hold on, we need to not let this happen. And I can understand why they said that.
I really want to know, Harry, about just financial planning in general when couples are looking to move. I think, there aren't a number of, we don't always know what should be considered, apart from we're moving our assets, we're moving our finances, we're upping and we're leaving. What exactly are some of the things that you should be considering in terms of financial planning for a couple that's looking to immigrate?
Yeah, Kgomotso, I'd say this is one of the most sort of appreciated difficulties in moving is that if you want to move, let's say next week to another country, you've decided we've got a job there, we're ready to go. It's not that simple, unfortunately. There's a lot of regulatory hurdles to step through. You need to tax migrate out of the country. That's the whole process. You need to move your money, which requires special approvals for over 2 million rand per person. And effectively, it's not a simple get up and go. And so that's why we really recommend that if anyone is looking at emigrating, even if it's not finalized, it's worth talking to an expert and having an expert understand it so they can advise you on what to do now to ensure that all your affairs are in order when you need to do that. And that can take as long as 6 months, sometimes a year for more complicated cases. So it is important, and I think what a lot of people do, we see this all the time, we get inquiries that say, hey, I'm leaving next week, can you help me move my money? And we have to say, we have to apply with SARS. There's a lot that needs to be done. We're going to be as quick as we possibly can, but waking up late can hamper your chances and make it a lot more difficult. So what I'd say is, if you are looking at emigrating, get in touch sooner rather than later, even if it's not finalized. What you don't want to do is have a last-minute panic.
And I mean, I want you to take me through that list, right? Because you speak about, having to go to SARS. What else? What else does the process entail?
Yeah, so it's different for every person because the process of tax migration can be very simple if you're not very integrated with SARS, but if you have businesses and you have trusts and you have other assets, it can be very, very complex, and that's where the complexity lies, is tax migrating. In terms of getting approvals to move money offshore, you have 2 million rand, what's called SDA, which is no questions asked, you can move it abroad. After that, you have to apply for another up to 10 million rand, and then you need a further special approval for more than that. So it's all dependent on how much you're moving and how complex your situation is. So for those moving smaller amounts of money, it might be relatively simple, but for those moving larger amounts of money, I mean, I say this as someone in the industry, it's extremely complicated. It's complex, it's convoluted, so it's very difficult to do on your own.
And what does one stand to lose, or how bad can things be if they leave it to the very last minute?
Yeah, so what can happen is you can just not get your payment across, and sometimes funds get returned with fees where you back in rands, but you have less rands than you had previously. And I mean, we know with the rand in particular, it's extremely volatile. So if you're, say, going to Australia, America, the UK, there's no doubt that there's going to be movements between rand dollar or rand euro or rand pound, whatever it is. And you can end up with less foreign currency, significantly less foreign currency, by getting it wrong because you meant to move at this time, but you're only able to move at a later time. And so I think in terms of how things can go wrong, there's obviously currency movements, but there's also delays, right? Which means maybe you can't start the job you intended to. So yeah, it can be quite dire if you get this wrong.
And then for couples who, are maybe a little older and they are also looking to move, in terms of retirement, what do they have to consider?
So if you're in retirement, it is slightly easier because you're not earning an income. And so, well, depending on your tax status and how complex your situation is, it can be a bit easier. What we typically find is that more people come into South Africa for retirement than leave because obviously it's relatively cheaper. So it's not a huge use case we deal with. It's typically people who find jobs abroad that typically results in them moving abroad or raising kids and wanting to have a safer upbringing for their kids. Those are the sort of use cases we're more used to than at retirement age. But yeah, I think it's relatively similar if you're in retirement too. I
mean, we're speaking to Harry Scherzer. He is the CEO and co-founder of Future Forex. And we're speaking about how South Africans, or what South Africans need to know and consider about financial planning before immigrating. It's on the back of that proposed new draft in terms of tax laws affecting married couples. Harry, I don't want to give people any ideas, but I'd imagine there are some sneaky things that people do when trying to, to circumvent the law, to get away with as much as they can. And I'd imagine SARS is onto them. But what are some of those things that people do?
Yeah, look, I think this was the big one, right? This was the one that SARS is now putting a close to, which is effectively to move at a different time to your spouse and ensure you capitalize on that different timing. So for one spouse to move first, transfer the funds to the now emigrated spouse, and then you move and you don't pay the exit tax. This was the clearest and easiest loophole for wealthy people to practice. And so, like I said, I can understand why National Treasury is looking to close that gap. Now, that said, this is open to public comment until the 28th of August this year, and it will be, if passed, it will be effective for anyone who transferred money from February, 25th of February onwards this year, 2026. So in other words, it will retrospectively be applied to those who transferred money in that gap. And so there is still a chance this doesn't go through, because people are arguing, well, hold on, what about those couples that are legitimately moving at different times? You're making their lives extremely difficult. So it may not go through. And if it doesn't go through, the loophole will continue to be used by wealthier, by the ultra wealthy typically. But that's the big one at the moment. I mean, there are a lot of other things that people do to improve on their taxes. Yeah. But that's the one that's pretty clear from an immigration point of view.
You know, Harry, I mean, if I'm a couple or I'm part of a couple, one of two who are looking to move currently, where do we go? I think there's not enough education out there about where do you go when you're seeking help, with making that move. I mean, where do you even start? You've just gotten this job offer, and it's a great opportunity, but you don't even really know where to start in moving your entire life, including your finances abroad.
Yeah, so Kgomotso, this is the big problem in this industry, is that if you want to move and you want to get started, if you go to your bank, I can assure you they will be extremely unhelpful. This is just from experience. Banks do not help with this because it's not the way they're built. They're not built to assist clients with their independent tax immigration and financial affairs. So this is why companies like Future Forex, which is my company, and other financial intermediaries exist, is to assist with this process, because it is complex. And even if you go to your accountant and try and ask them, you're basically going to get, well, I can apply for your SDA, but I'll have to outsource the tax migration side. And we came together and said, let's do this as a one-stop shop. We can transfer the money at a cheaper rate than the banks. We can assist with the tax migration, and we can assist with any approvals required as a complementary service. And so this was sort of the reason that we built Future Forex, and there are other companies that do a similar job. But the problem is people don't know that. They go to their banks and ask them for assistance, and they just push you from pillar to post. And so that's why I think it really is worth chatting to an expert if you are in this situation.
Yeah. I see a WhatsApp from Rian who says, my comment is regarding exit tax. Is this not double taxation? I mean, if I've already paid the tax when I earn the money, then when I sell my house, that's a great question, actually.
It's an excellent question. This is what people are challenging. This is why it's up for public comment, because they say, hold on, this is double taxation, and the exit tax can be up to 18%. So you pay capital gains tax of, say, 16%, and then another 18% on exit tax. But this is how moving works, right? There are two sets of taxes when you move, if you're going to sell something. I think that's where almost the justification kind of came from, to utilize this loophole to say, hold on, I've already paid the tax when selling my house. I'm just going to transfer this to my spouse who's already tax emigrated, and that way I don't have the second set of tax. But that wasn't the intention of the government. The government has said, look, there are two sets of taxes. The one is on any gains you make, and the other is on leaving the country. So I do understand the question, and it's a very fair question. It's just that the government see it differently.
All right, Harry Scherzer, let's leave it there. Thank you so much for your time. He's the CEO and co-founder of Future